Hello, everyone. Welcome to our webinar, The Art of TradeStation, Make the Most of Earnings Season. I'm David Russell, VP of Market Intelligence at TradeStation. All right, so I'm going to start off with some initial disclosures. And in fact, before I even do that, I'm going to share a zip file with you. Oh, it looks like we already shared it. Great. All right, let's get going. Following presentation is for educational purposes only. All symbols and trading ideas discussed by the instructors are for demonstrational purposes only and are not recommendations. This presentation is not offer or solicitation of any kind in any jurisdiction where any TradeStation affiliate is not authorized to do business, including but not limited to Hong Kong and Japan. Active trading is not suitable for everyone. Options and futures trading carries a high degree of risk and is not suitable for all traders. Please read the disclosure information handout or the electronic disclosure information available on the TradeStation website. Okay, so today we're going to run through a bunch of interesting functionality on the TradeStation platform. We're going to be using some special apps and indicators. Most of them were included in the zip file that has now been shared. If you open that up, you're going to see some. This is what you're going to see. Okay, so this is your. I've got several items in it. The main one is this Art of TS Jan 2021, which is an easy language document. Now, what this is that this is inside the zip file that the link is for. And now it's important just to know how this works. This is basically a series of indicators. It actually has a bunch of indicators in it. If you guys have been in my webinars before, many of these indicators you've probably already used. If you're new, then that's great. So you have to have TradeStation open, and then you want to double click on this, and this is what's going to happen. It's going to bring up this dialog box. You go to next, and then it's going to list all these indicators that it's going to import. Now, many of these you will already have. I'm not going to mess with it because I already have them, obviously. If you have them, it doesn't matter. You can overwrite whatever. So now, so that's the first thing you want to do. Now, the next thing we want to do is we want to go to the trading app store. So now I'm going to show you, if you go to the trade, let me just start off by looking at the TradeStation website and see how this works. So here we are on TradeStation.com. I write a blog for TradeStation called Market Insights. If you go to Learn, then you go to Market Insights from the TradeStation homepage. Here's the article. Here's my blog, and we write, lots of things here about what's happening in the market. There was one an article I did a little bit while back, which we're going to base a lot of this on, which you go to education, and then you can go to platform, and then there's a kind of a nerdy young man with his computer. Here's how to make the most of earnings season. I did a similar webinar to this back in October, but this one I'm going to be doing some different things because this market is got some new interesting things happening in it. If you go down a little bit, there's a link to something called Next Earnings Date. Now, this is in the TradeStation Trading App Store. And so this is a different part of the TradeStation website. These are like kind of tools and apps that you can install into your TradeStation platform. Here it is. You can install it right there. Now, I already have this installed myself. If you do this, it will take a couple of hours. You're going to get an email activating it. So what you want to do now is you've imported that zip file that has a bunch of tools on it. And most of the tools I'm going to be showing you can play around on your own and follow in this webinar with those tools. Certain tools, though, you're going to have to wait for this to populate. So you're going to click on install. It's going to prompt you through to the customer center, the client center, where then you have to log in. You have to agree to some terms. You accept it. And then within a period of a few hours, it will update your TradeStation platform. You'll get an email saying it works. And then the way you're going to actually see it is right here, what I already have, which is if you have your TradeStation platform open and you click up here on there's the apps button. Right now it's showing for mine, but this is, you'll see here, Trading App Store Updates. You're going to click on this, and then it's going to be called, why is it doing that to me? Let me just do this. Go to New Application, Trading App Store. Wait a second. Sometimes I'm going to just open a new workspace. Sometimes it does a weird thing where I think my mouse is confused by Zoom. So I just go to Trading App Store Updates. Now I'm going to close TradeStation and start again. I apologize. All right. Oh, you know what? I already have one open and it was stuck in the background. Sorry about that. Let me just relaunch TradeStation. All right. And what this is going to do now is this is going to allow us to query the TradeStation data to get information. One second here. Apologize for that. Here, while I'm letting this reload, I'm going to share some other files with you guys. Here's some other YouTube videos that I did, and I'm going to be referencing, one of the things that is to me most interesting now is we've had all these IPOs coming out, DoorDash, Airbnb, and a bunch of others. Some of these companies are going to soon be doing their first earnings reports, and I'm going to mention all that. But these, I'm going to be drawing on certain, principles in these earlier webinars I did. And anyway, here's also the trading app store. So basically, I just wanted to share these links in the meantime, because some of the things I'm going to be mentioning are developed and explained more fully in these other things. So I'm going to go to Trading App Store Updates, and I'm going to go to Next Earnings Date RS. For me, it says version 2 because I've installed it like multiple times, but you'll see something called Next Earnings Date RS, and you're going to launch it. So that's what you're going to do, and this is what we're going to be working off of now. Okay, so it is this. This is the official version of our next earnings date page. The key thing that's really important here for you guys who are new to TradeStation, you're going to see this over here is called Radar Screen. Now, Radar Screen is kind of like a super turbocharged version of Excel with a bunch of other stuff in it that is basically like a grid that has all kinds of awesome data that you can pull in and out of it, and you can add indicators to it. So this is Radar Screen, and this is a chart study. You'll notice that they're linked with symbol linking. So if I click on a stock over here on the left, it will pop up on the right. Currently, it's showing the members of the Dow Jones Industrial Average. Now, the thing that we're really excited about here that we really want to show is this indicator here. This, you'll see in a column, this basically is going to tell us, when companies' upcoming earnings are, and it's going to allow us to sort. Now, you can obviously see the usefulness of this because it allows us to kind of anticipate, and plan going into earnings season. And of course, this is the Dow Jones Industrial Average, but we can have any company on the list. And that's the main thing I'm going to do now. The Dow is a small kind of, I don't really pay that much attention to it compared to things like the NASDAQ or the S&P. So I'm going to just now, I'm on this, I'm going to, Control A, select all, delete, they're all gone. Now I'm going to do data, add symbol list, S&P 500 index. Now it's going to bring in the entire S&P 500, and now it's going to populate a bunch of data for the whole S&P 500. It's going to find when all those earnings dates are. It's going to take a minute or two to do this. So what we're going to be doing now is, as this is populating, we're going to be, the main thing is right off the bat, we can now, kind of sort. And obviously see, who reports earnings when. You'll also notice that it mentions if it's the, the pre-market or the post-market. You can see that here. It tells you how many days, and then it also tells you whether it's estimated or confirmed. Very often, you're going to have a company, the data service we use will estimate, like, when does Nike report? Nike reports at the end of earnings season, so it's probably not confirmed yet. But then a company like, AMD reports next week, or Apple very soon, it's going to be right there. You can see Apple is confirmed for the 27th. All right, great. Now we can do a lot more with it, and that's what we're going to do now. So if you imported the zip file, like I said, and you went to this ELD, like I showed you, this ELD, Art of TS Jan 2021. By the way, in this zip file, I also have all my slides for my December webinar, which is just kind of, I'm going to, tangentially mention it, but then also the earning, this is the one I'm doing right now. So the slides are in here as a PDF that you can see. I use, just so you notice, I use Chrome to read PDFs, but it's actually a PDF, so don't get confused by that. All right. There's also an Excel spreadsheet with a whole bunch of holdings of ETFs, which is an interesting technique I'm going to show you during the presentation. But first, I want to show you how to do stuff in terms of assessing. All right, we have this huge list of stocks out here, and we can obviously now rank them based on when the earnings are coming. We can rank number of days till the earnings report, which is very useful. But we can do a lot more than just that. And that's why I share that indicator. So I'm going to make my radar screen bigger, and I'm going to start adding indicators. I'm going to go to studies, add study. Now, these studies, most of them are studies that you only have if you imported the ELD file that I just gave you, which is why it's important to do that. It's pulling up my list of studies. Now I have a different studies than you're going to see here because these are all personal to your own user. So the first one I'm going to add is BV over share 5-year growth. This is 5-year book value growth per share. I am a big believer in book value. It is book value usually doesn't lie. Put it that way. Sometimes earnings, they can be unclear, but book value doesn't lie. Price to book is another interesting one. Price to book has been extremely important recently because everyone's talking about value stocks, or they were, maybe not anymore, but for a few months there, we were buying energy stocks. Everyone was buying financial stocks, these companies that were trading at huge discounts to their book value, some of those sort of things. Price to book is another important ratio. Now, these are custom indicators I created. All right, next is price to free cash flow. There's another one we want to add. We also want to add price to sales. I'm a big believer in valuing stocks and price to revenue because we're in a growth market. We're in a technology market heavily, and price to sales is probably the single best. Price to free cash flow, but I honestly believe price to sales is probably the most universally useful valuation, metric for companies in the technology sector, communication sector, medical, pharmaceutical, medical devices, all those kind of interesting companies. Some of them have been performing well. Social media, software, all of those are useful to view from a price to sales perspective. Price to sales, and of course we have revenue growth. This is another one that we have here. Revenue growth. I'm going to add that. Price to earnings. I like to see all of these. And one of the reasons why, one of these things we've taught in our masterclass is that very often, you're going to see multiples. Companies can be valued based on their industry. So you'll see that most software companies trade like at similar price to sales. You're going to see other companies trade at similar price to earnings. Financials trade at similar price to book. So when you're looking at companies to assess their expensiveness or cheapness or other metrics like that, it's good to look at a lot of these multiples because something like price to book is totally irrelevant in the tech space, and something like price to revenue is totally irrelevant in the financial space. So for certain industries, certain ratios matter. So let's just throw them all in there so we can see everything. EPS growth. Now, those are all custom ones that I created. The other ones that you already own, they're built in the TradeStation, are industry, which I'm going to add. And I'm going to add this other one, which is one of my personal favorites, which is average options volume, which is another one that was a custom one that I just gave you. So I'm going to hit OK, and now boom, it's going to trickle through. It's going to take some time. Is there any study that shows the earnings paid date? I don't. Stocks gap because of earnings payouts. It would be nice to know. I don't understand your question, sir. I don't believe you're referring to dividends. There is a way to show earnings on the chart, and I personally don't look so much at earnings beats because, in my opinion, in my experience, just beating earnings itself is not that important. Earnings are the things that are most likely to give a false signal. Very often a company will have, they'll squeak by on the bottom line, they'll miss on revenue, they'll have bad guidance, the stock will get clobbered. So for me, I don't really look at earnings beats all the time. It definitely can be important, but I'm more interested usually in things like revenue growth and very often things like guidance. But if you want to rephrase your question, I will try to answer it. All right, now we have a whole bunch of this information, which I believe, this is some of the stuff now that is going to be, interesting for us just to kind of see and to look. I like this revenue growth indicator a lot. It tells us two key things. It has two columns in it. First is going to just tell us the percentage revenue growth. You can see what's interesting about this is we can see right off the bat that we see that some of our, airlines and stuff, massive revenue declines. Not surprisingly, this is on a trailing 12-month basis. So basically, companies like this, the last 4 quarters on a trailing 12-month basis, very negative for these travel stocks. But then you can also just sort them and see companies like Etsy, T-Mobile, which is actually inflated by the Sprint deal. Some of these might be inflated. I think Ingersoll Rand also had something that that distorted its numbers. But you can see right off the bat here some of our strong kind of, growth things. We can then, sort also by things like price to book, like I mentioned, which this was extremely useful. You'll notice a lot of these financial stocks and energy stocks here are trading, below book value. These are just some of the sort of things that you might want to be, looking at or considering. It depends how you want to approach some of this, but in many ways, by putting all this up here in front of you, you can see a great deal of information, right off the bat, and start to anticipate also areas where you might find opportunity and things you might want to be looking at. Companies that have been growing or not growing, maybe companies that have had massive, actually one thing that I think earlier, a few months ago, we were talking about, in some ways, buying the companies that had the worst revenue growth was actually a decent strategy, because it was simply a way of looking for the kind of reopening, sort of approach. Now, another thing that's good about this is we brought in this indicator here for industry. So now we can just quickly, I'm a big believer in putting stocks in context. Some of the other webinars that we've done, the one I shared, how to find, leaders in any market, we focus heavily on putting stocks in a context of their sectors. And that's one of the things actually with the ETF Excel spreadsheet I just shared that is useful. But I like to just kind of go through and look, and then to have a sense of when companies are I like to look at companies by the sectors and the industry that they're in, and then kind of also anticipate if I'm bullish on a certain group. Now, the nice thing about this is you can just now go and say, well, I only want to see, like, for example, I care about biotech stocks. So the great thing about this is you can just go over here on radar screen. If you're interested, you can just go right above. You can start on that. You can then, select everything above just by holding down Shift, hit delete. Then everything that is not in that group, you can go over here, and then you can just erase them all. And now you can just go and you can quickly have, your own list, for example. All right. So that was, let me go back to my slides. Wait a second, here we go. All right. So here's what we basically did. I added, all right, now I'm going to show you, these were all fundamental indicators that we added. Actually, I did want to mention one other thing. I'm going to just go back now and re-add the whole S&P 500. Data, add symbol is S&P 500. This indicator called average options volume, if you guys like to trade options, one of the trades I have historically done, I haven't done it for a while because the VIX has been so high, but the VIX, one of the things we wrote recently about how the VIX could very well be headed back under 20 at this point. If you guys may or may not know, we do another thing that we share is we have this outside company we work with called TradingView. And if you go to this page on TradingView, this is where I do some analysis and kind of ideas and chart studies and analysis. And one of the things that I recently did was this descending triangle in the VIX. So I'm going to take a look at this. There's a lot of things right now, as I highlight in this article about the VIX, that very well could be looking to squeeze us to the downside. And when we go into a more kind of, low volatility market, that's when it makes sense to start taking more directional trades. And that's when, I like to very often look for companies that had good earnings reports before, and then look at them to melt up into their future earnings reports. And I'm not sure right now exactly which stocks those will be, but one of the things that you need to have for that trade to work is you need to have good options liquidity. So the good thing about this indicator called average options volume is this, I often say, if a stock's not trading 10,000 contracts a day, I don't really care about it. And so when this thing populates, you're going to actually see here that this indicator, it's rebuilding itself here, but this indicator will highlight stocks that trade more than 10,000 contracts a day. And then so you might want to just do is just say, I want to see all the stocks in the S&P 500 that trade 10,000 contracts a day or more. I'm going to erase everything else. And then I'm just going to look for when their earnings are coming up. There are certain things like that that might also be interesting if you like to focus on earnings. So, when it comes to me for earnings season, I think the options is a very important tool. All right. So I'm going to do now is I'm going to show you some more stuff you can do now with technical indicators. So these were fundamental indicators. We added the average option volume. Now we're going to add some technical indicators. Now I wanted to mention that technically on TradeStation, we have indicators and we have show me's. They're similar, but they're not exactly the same thing. Think of something like the 50-day moving average. The 50-day moving average, as long as you have 50 days of history, will always be on the chart. So every day, there'll be a moving average. A show me is something that only happens when it happens. So like, for example, this actually has a show me for the earnings reports. So you can actually, it is when Disney reported earnings. You can actually see it right there on the chart. It only shows when there actually is an event. So like some of the things I'm going to show you now are actually show me's. They're not just indicators. So I'm going to go now and let's just erase these to make some space. Now remember, all of these are listed in this PowerPoint. There is the somewhere here I actually do list the some of these indicators. Let me just go back to this now. All right, so now what we want to do is go to studies. We're going to add study, and now we're going to add Ichimoku Cloud, which is a very common and interesting tool that basically finds whether how a stock is trending relative to its price history. I also want to look at price channel. Right, price channel percent. All right, now I'm going to add some show me. See, these are indicators. Now I'm going to go to show me, and I'm going to add C Doji. That is going to be that's a certain candle. Wait, what pattern? It's going to pop up when it shows you a breakout of X bar high. This is also going to show when it moves out of a range over a certain time period. Wait a second, it's in indicators. There we go, X bar high, outside bar. All right, now going back to indicators, there's another special one that I'm sharing with you that I created called MA test, another one called MA streak. Here we go. Adding all of those, then we hit OK. That's going to populate these for the S&P 500. Now, just to help illustrate, I'm going to go over here. I'm going to add indicator to the chart. I'm going to add price channel percent. Okay. It shows up down there. Now, price channel percent. Ichimoku Cloud at this point is populating for this, but I can just show you now price channel. We're going to see what this is. You can just look for the ones that are, at the bottom of their channels. So for this, you would simply look for companies that, for example, you can show a historic price channel, and these are things that would be potentially oversold. That could be, potential ideas we want to be looking for. So the idea is when you have, certain stocks that maybe have earnings a certain period of time out, this is just another way to look at a large number of companies and find potential, stocks that are overbought, oversold. Ichimoku Cloud is the one that is in many ways most interesting, but I wanted to just, it takes a little bit more time to populate. So now I can click on trend direction. And the cool thing about this one is this can actually show, new signals. If you go down here, you'll actually see that some of them are going to show up as new up. So for example, it's interesting today, Microsoft actually was a new up today. You go on our list. And you can just look now at some of these companies that maybe are starting to have some interesting patterns, not very far away from earnings. So it's interesting to look at a company like this. Now, the other thing is that we do have our earnings date that is still here. It's all the way over here. See, this is one of the problems sometimes when I want people to be able to see things. You can look at a stock like this, DHI, 6 days until earnings. It's a new bullish signal. So some of these kind of companies, same things, Microsoft, 6 days till earnings, new bullish signal. These are some of the patterns that are going to be, potentially interesting when you're looking at there's a strong amount of conviction on something as earnings approaches. So that is another way I think we want to look to use this. Let me go on to my next one. All right, MA test. Now there's another one that I've shared. And what this does is this basically allows us to find, all right, actually, no, let me just keep going in order. C Doji. All right, this is, for some reason it says C Doji. This is basically, I'm pretty sure there's a kicking Doji. This is, let me just go back to study, add study. All right, this is one that simply shows a Doji. I remember now, I apologize for that. I have my own system sometimes for doing this. What this will find is this will find candlesticks that are dojis, and it will just highlight, how many days ago since it happened. So you'll notice is now doji is a candlestick pattern like this, and this is when there's a high tail up and a high tail down. And what this is going to do is will often be an indicator of movement starting. And you might want to often find something that could have, for example, that have been drifting in a range, and it could have, a doji because of an earnings report, or because, with an earnings report approaching, that could show that it's starting to move in a certain direction. Now, you also have this thing called breakout of X bar high. What this is going to do is this is going to show us if you have a certain time range. So if you right click on it, you go to edit, it's going to have then inputs. This is going to show a 14-day time range. And this is going to show companies that today broke above their 14-day time range. Which is also very interesting. I thought it was I just want to say today, I thought there was something very interesting in companies like Kimco and Simon Property Group, which were which these are like the shopping center companies. There seems to be an interest right now in the companies are going to be focusing, reopening. We've heard this all for a long time, but a lot of these companies actually have not done anything yet. And we're starting to see some interesting things up today in the shopping center kind of companies. So anyway, this is one that I think is an interesting indicator as well. The breakout of a certain time frame. It's set to 14 days, and the thing about this is, if it does, this is going to actually show that it broke above the time frame. And the thing is, if it doesn't have a value, then if it has a value, then it's a positive signal. It's like a signal. If it has no value, see like City or something, it didn't break out of its range, so therefore it doesn't have. So in this one, you're just going to look at everything that has a signal, and then you can see everything that doesn't. See, now remember, these are show me's, because an indicator is always going to have a value and a show me will not. All right, outside bar. This is a pattern when the stock makes a lower low and then a higher high. Look at a stock here like American Airlines. It's pretty interesting. You have a company here that has actually, if we look here on the chart, this has the indicator here will show us as well. Earnings on this are 1 week out. If you right click, if you actually left click on this on the text here, it's going to show you how many days until earnings. It's going to tell us it's confirmed. So this was a stock that had a false breakdown. It tried to break down, it held. It's consolidating here. This is I think airlines right here are interesting for multiple reasons. They really haven't done very much here for a long time. They seem to be, starting to get interesting. Now, another thing that we actually did an idea recently on TradingView about United, which worked out pretty well. Actually, if you look, I removed my average options volume, but airlines trade a lot of options. They can be, very interesting stocks when they move. All right, and then so basically, we look at the companies that outside bars, and we can start to look at these as potential patterns that are potentially bullish or bearish. it's a reversal pattern overall. It's generally a bullish thing, but when you have a stock that's been running a lot, like some of these energy stocks or something, you look at this, it actually closed below its high, which is Apache, or I mean, this one is Devon. It is a reversal pattern in many ways. And when you see something like an outside bar at a high, that can also be sometimes a sign it's going to reverse lower. And then the other one is, this is an indicator I created, which basically will show when a company is testing its 50-day moving average, or any moving average you want. Now, the nice thing about this is it's going to highlight and tell you if the moving average is a positive or negative moving average. So this just does a simple moving average. But if we go to this now, and I'm going to add, for example, on this chart, I'm going to go to studies, add study, moving average one line. I can then add the 50-day moving average, and you can see what I mean. I'm going to change this here to 50. I like my 50-day to be red, so I'm going to go to my color and set it to red. I like this red better. And then you're going to see here, if we go back to companies here, you can see these are companies now that are testing their 50-day moving averages, which is just kind of interesting for me. Overall, like, this is a pattern that, is one of the most common things, waiting for a pullback to the 50-day moving average. So you can very quickly here, you can see now, I think when you put all these pieces together, you can find companies that maybe report earnings in a month that have pullbacks to the 50-day moving average, for example, something like that. Now, another indicator that I have created, I call it MA streak. And what this one does is, this one finds the direction of a moving average. In this case, it's going to look at like the 10-day moving average. And what it's going to do is, I can just change this to 10 so you can see this. What this will allow us to do is, this is going to allow us to find stocks that have recently changed short-term direction. So I'm going to change this to 10-day moving average. And this will, if the 10-day moving average is rising for one day, it will plot a 1. If it's falling for one day, it will plot a -1. So this is something where you can look for companies that have recently changed direction. And this is, another indicator that I have found to be useful. So all of these are things that, and you can change the time period, of course, if you go to studies, edit this. So the point of all this is, what we want to do is, we can look very quickly to see when companies report. All of this, we want to be starting over here with our next earnings date. We can then sort and find the companies we're interested in, and then we can then look at different things on them. Or what we can do is, we can just take the S&P 500. We can say, I only want to find stuff with a bullish Ichimoku cloud. Okay, great, let's do that. For example, we can just say, trend direction. We can then go to, new up. We can erase everything that is not, this. We can erase everything that is, for example, bearish, right? And then we can say, all right, now I found everything that is bullish according to Ichimoku Cloud. When do they report earnings? And then I can just look down my list. So these are some of the things that, when we're kind of surveying out and preparing for earnings season and trying to anticipate, these are some of the ways we can use these tools. Okay, now that is starting off with the S&P 500. Now, there's a lot of other ways to start off. As I shared, there's a YouTube video for our Finding Leaders in Any Market. In that YouTube video, I use this workspace, which is included in the zip file that I shared. So you can use this workspace as well. So far we had the workspace that was included from the Trading App Store, and then we had the workspace that is from a previous webinar, but I wanted to show you, I think, an approach to doing this. Depending on how you approach the market, I mean, I believe, and there's a lot of studies that support this, but I'm a big believer in looking at sectors. You want to be looking at the sectors that are strong, getting a sense of what the market is doing. It likes this, it doesn't like that. It's fairly obvious, but like a lot of people, they get hung up in a certain sector. They only like tech stocks. They only like this, they only like that. And then when that sector is dead, they're just not finding opportunities. So what I like to do is this workspace. basically allows you to look at the market from a lot of different views. It allows you to basically look at risk on sectors like small caps and energy, and then it allows you to look at things like the growth stocks, and then it allows you to see different ways I think that are interesting to dig in, and then also these industry ETFs. I look at these all day, every day. I find a lot of opportunities to write articles based on this. It allows you to sort and see things like, for example, wow, solar energy is the best performer in the last month, for example. All right, solar energy. So what do I do with that? Great. I want to trade solar energy, but I don't know how to do it. I don't even know any solar energy stocks. All right, so let's clear off our radar screen again, and let's go to the other thing I shared, which is this Excel spreadsheet, symbols with ETFs. So what this is going to, this is basically a list of thematic ETFs. The same ETFs that I shared down here in this finding opportunities in any market. These ETFs all have holdings, and they are in this spreadsheet, which is right here. All right, so solar energy is TAN, T-A-N. Find my TAN. I just copy the members of TAN, and now I go over to my spreadsheet, to my radar screen, and boom, here they go. I copied and pasted them in. And now you can do this sort of thing. So if you're bullish on a certain sector, a certain part of the market, a certain industry, if you're interested in opportunities in that sector, you use this to find where's my strong sectors, and then you go to your to the Excel spreadsheet, you find the stocks, and then you drop it into next earnings date. Now you're ready to go. Now the nice thing about this also is you can do some other things with this. Well, we have Ichimoku Cloud, but you might want to add other things. You can say, all right, let's look for these now. I'm gonna actually just drag this over, make it a little bit easier. But I can say, let's find companies that are, for example, well, this is small group, but we could find companies that, for example, are pulling back to their moving averages or things like that. I'm going to add another indicator that I have included. This one is called 21D, which is just 21-day percentage change. Okay. And now I can look at companies in this industry, like, for example, that have pulled back in the last month. Solar Edge. This is one that's been a monster. It's interesting that this stock now has pulled back. This is the sort of thing that, maybe this is an opportunity. I'm just saying these are some of the things you can be doing. You can find a strong sector that's been outperforming and find those one or two stocks that have been pulling back, those one or two stocks that have maybe pulled back to their 50-day moving average, or that maybe are in the bottom of their range. For example, you see the same thing here with our price channel. You can see that a stock like Solar Edge is actually the lowest on its price channel. You can see here at this price channel down here. So these are this is price channel percent. There's also price channels which show it on the chart itself, but this is just an oversold, overbought sort of indicator back and forth. Okay. All right. Let me see. Now I'm going to turn to some of your questions. Yes. All right. So the question is dividend paid. Yes, it's a show me. You go here to studies, you go to add study, you're going to go to show me, and then it's going to be dividends. Wait a second. You know what? I was pretty sure has EPS postings. You know what? I stand corrected. I apologize. I don't think there is. I honestly, I have to admit, I never pay attention to dividends really myself. Most of the stocks I look at don't really pay a lot of dividends. So that is a good question. And if you email me, I'm going to share my email. There are ways to find that. I'm simply not sure what it is. This is my email. I will get you an answer and I'll respond. And then, maybe in the future, I'll do another webinar or I'll post a blog article about it. Okay. Where can we get a recorded version of this webinar? It will be available on our YouTube channel for TradeStation. Which indicator shows long-term trend? Well, there's a lot of them. What I would often do is in another webinar, I have an indicator that will allow you, for example, to find, you can screen for stocks with a 50-day moving average is over the 200-day moving average. You can actually do that in Scanner. If you go into Scanner, which I'm about to show you now, you can find things doing that with Scanner. But right now I'm going to show you the next thing. All right, using Scanner. So the main thing is what we're doing now with this is we are using radar screen to analyze stocks now, finding stocks that have interesting, valuations we like or something else like that, or has a technical condition like it's at the bottom of a channel, or recently had an outside bar or a doji or something like that. So this is what I just showed you how to copy and paste into that spreadsheet. All right, we've been working with Scanner. There's the other key, we've been working with radar screen. The other thing we're going to look at now is Scanner. So radar screen is, it's like an Excel spreadsheet tool that does all kinds of things. They have indicators, you put in a list of stocks, and then it will show you all kinds of data about those stocks and set triggers and alerts, which I'm going to get to at the end of this webinar. The great thing about Scanner is it is very fast. You can easily change symbols and columns, but the drawback, so to speak, is that you have to give it a list of stocks, and it can only take 1,000 symbols at a time. If you're running 4 versions of radar screen, it will still, count how many you're using. It's not going to, you can't put 500 here, 800 here and 800 there. It runs as one program. So like, just so you know, if you have multiple radar screens open, you can only have 1,000 symbols in all of radar screen at once. So it's just a tip. Sometimes people say my radar screen isn't working, and it turns out they forgot that they had another radar screen open somewhere with 900 symbols in it. So this is just a little thing. Now, Scanner is different. Scanner searches the entire symbol universe, which is cool because, new stocks get born all the time. They pop into the market, they come out, and, we don't know they exist. We've seen that recently with a lot of these, SPACs and IPOs, which I covered last month. But, the thing is how do we, find those companies? And we use Scanner for that. It will look at the entire symbol universe. The drawback of it is that it's slower to search, and it only displays values in the search. So if you have a bunch of stuff in Scanner and you're scanning on a certain value, you cannot then sort or see other values, which is kind of a limitation. But the real benefit is we want to use these tools together. So one thing just right off the bat now I want to show you is scanning for recent IPOs. This is something I did in the last webinar. The reason we're going to do this is, boom, we had all these IPOs come out recently, but when do they report earnings? How do you know that? Well, we're going to scan for them, and then we're going to drop them into that radar screen. So here's how we're going to actually build the scan. For now, I'm going to just open a new workspace to save what I've got. I'm going to go to Scanner. There's another custom tool here. All right, I'm going to go to New Scan. I'm going to call it I'm just going to put the date because I have too many scans. I need to go through and just have a mass purge of them. Let's do today's date, and then I'm going to call it, recent IPOs. Name it is the first step. Next, we want to go to select our symbol universe. I'm going to say all stocks. Next. Okay. The next thing we want to do is we want to find stocks that have average volume of at least 500,000 shares a day. So volume average 10-day greater than. I'm using Scanner a lot recently because there's all these companies that are just coming out of left field now. All right, the next one we want to do is market capitalization. So we go down here to capitalization. Market capitalization greater than 1,000. The reason is because it's listed in millions. So 1,000 is going to be $1 billion market cap. And we want to say, all right, now, so these are both built into Scanner. Now you'll notice that these are all up here in these kind of folder things, right? These are all pre-built. Now we're going to go down to indicator. We're going to use a special indicator that I'm sharing with you in that ELD that's called IPO Tool. IPO Tool has 2 outputs. And you have to make sure you're selecting days of history. And then we're going to say less than 100. What does this mean? We're going to find stocks with 500,000 shares average share volume a day, market cap over $1 billion, but have less than 100 days of history. That's going to find stocks that are recent IPOs. All right. So while that's running, this is going to create a list that we will then copy and paste into the next earnings date. All right. So I'm going to let that run, and then I'm going to show you another scan. It's not going to take very long. See if I have some more questions. Is there an indicator for future earnings date? Yes, that's exactly what we were showing here. Once you've imported the thing from the trading app store, when you've gone to the trading app store, the next earnings date indicator, you will have access to this thing called next earnings date RS. And this is something that you can add to any radar screen. So if I'm over here just, doing some analysis, I can create a new radar screen like this. Right? I can just put in a bunch of stocks I like just put in like, Apple, Microsoft, Nvidia, Facebook, Netflix. All right, and now I can just go to data. I can go to studies, add study, next earnings date, next EPS date RS. See, I've installed it unfortunately multiple times, and it's not that easy to remove. But then, boom, here it is. You can do this after you've done the install that I mentioned at the beginning of the webinar. When you have to go into the trading app store, then you're going to have to accept like terms, and then it will send you an email after, like I said, and tell you. But then, yes, this indicator you can do just like that. Now, the other thing that's nice is that this will also plot up here whenever you're looking at a stock when the next earnings date is, and if you right click on it, if you click on it, it will tell you, oh, 28 days away, it's tentative, but it will highlight on the chart as well. Okay, so this scanner is almost done. While we're doing that, I just want to mention, like right now, some things I think are interesting at the market as we go into earnings season. And the main thing I do is, Jesus Nava is our main instructor in how to use the platform. I am, an analyst and a writer. I do client events. I help with a lot of things, but my main thing is I look at what the market is doing. I write about it. I find, I basically analyze and assess a lot of market trends and share it with clients. So, as I look at some of the things happening right now, I was doing a lot of research, and I've came up with a very interesting fact, which comes from FactSet, a company called FactSet, which it's like Thomson Financial, which analyzes earnings trends. But they said adjusting. So basically, in theory, if you just take the analysts at face value, we're going to have earnings growth down 5% this quarter. However, when you consider the size of your typical beat, we will actually have earnings growth of 5%. Another interesting fact is a record number of companies, I think over 30 companies or something, issued upside guidance before earnings season. Now, normally before earnings season, you come out and you say we're going to miss our numbers, or you don't say anything at all. It's less common, historically. You're going to have a negative warning before earnings, not a positive warning. There has never been this many companies issuing bullish guidance before earnings in the history that FactSet has been tracking it. So I think that's very interesting. And also, you have twice as many companies issuing bullish guidance. So the raw number of companies issuing guidance was a record, and you have twice as many when it's normally the opposite. It's normally like a third of the companies, issuing forward guidance are positive. This one was, a 2-to-1 bullish over negative. So that's a very interesting thing. We come into this earnings season with a huge amount of negativity that companies have expressed. And then you have to think about the way these guys actually manage stuff. If you're back in March or April, you're going to come out and just say everything is terrible. You're going to guide everything down. Everything is negative, because then you have a lot of breathing room. But then when things start getting better, you start turning more positive again. And now that's the situation that we're in. And that's the reason why the VIX is coming down. Another thing I think is important, just that I wanted to mention was, things like what happened like with General Motors in the last few days is, to me, I think, kind of an example of what's happening in this market. In a bearish market, everything goes wrong. In a bullish market, everything goes right. When you look at a company like General Motors, it can like surprise with flying cars and electric cars. I mean, this is the kind of thing that we're seeing now. And I think it's interesting to see that some of these companies that are your traditional old companies are going to reinvent themselves. I don't know if you guys have even seen, but a company like I mean, have you seen like BlackBerry lately? I mean, it's almost ridiculous to see the move that BlackBerry has made. This company was supposed to be dead forever, and now here it is up, basically 100% in a few weeks. So this is some of the stuff now where I think we are seeing this is not just about the big companies anymore. There are just hundreds of companies that are breaking out and doing all kinds of interesting things, turning their businesses around in interesting ways. And really, you're not going to get that information if you just read analysts and stuff, or even read blogs or news. You only get it really by scanning for price action and doing some of these things that I'm showing you now. Finding companies. In this case, I'm not really showing this to you, but the key thing is, because I'm focusing on earnings now, but every week I just say, show me all the companies that are up, like 20% or more in the last week. And I just look at the lists and I study them. And then I start setting alerts for them. I start looking for when they might pull back. I start reading about them, and then I start writing about them for you guys. All right, so here we have our scan for recent IPOs. You're going to notice this indicator. You can't see it very well. Let me see if I can make it bigger. I think I can make it bigger. Displayed values. Let's see if I can make it. There we go. All right, this is the IPO tool here. This is the special indicator that I shared called IPO tool. Days of history is the output. So this is going to show new companies. You're going to see, for example, some companies here you might have heard of. Like Airbnb is somewhere on this list. You can look at this and see, oh yeah, Airbnb, they have 26 days of history. So here's our list of companies that have gone public in the last 100 trading sessions and trade at least 500,000 shares a day and have a market cap over $1 billion. So I'm going to copy and paste that list. Same thing. Copy, take it over here, and in this case, I'm just going to add like another list here to radar screen. And here are my recent IPOs, and now I can find out, wow, when's Airbnb, reporting, for example. I can just go now and then sort. Same thing. It's going to take a second to query and populate all the data, but I think you guys get the idea. I am very interested in seeing how some of these companies perform going into earnings. It's just a very interesting sort of time that we're in right now with so many of these companies, and so many of them are companies like, I mean, literally, we have artificial intelligence companies coming out. This company AI has been a complete monster since it went public. There's a lot of these companies that have made some really big moves. There's companies like Corsair Gaming. I've highlighted some of them, but there's a lot of new companies out there, and a lot of them are focusing on things like artificial intelligence, different kinds of virtualization, software things. So I want to just mention that this is another thing we can start to look to do. All right. All right, now there's another way we can actually scan for earnings coming up. Now this is a different indicator. The indicator that I shared here that we were using, this thing called next earnings date RS, this will not work in Scanner. But there's a very similar indicator. Now this indicator is called pound. All right, let me actually just show this to you. Let me go back. All right. You add this thing called EPS days till post. It's not a very graceful name, but what this is going to do is this is going to show how many days till the EPS post. And what this does is this looks at the past earnings date, and then it estimates when the next earnings date is going to be, and it inputs how many days. So we're going to go over now to Scanner. Let's take the existing scan here. Instead of recent IPOs, let's just change. I'm going to disable this. I'm going to add a different indicator. I'm going to add indicator. And you have it in the ELD that I gave you with pound EPS days till post. I'm just going to add that, and then we're going to say less than 30, and then run. Okay, let me look for more of your questions. How do you know when transition from one style of researching opportunities to another and make it relevant to today's conditions? All right. Well, I would say a few things. First of all, it's important to look at the calendar of events today or yesterday was the first day of big tech earnings. And we also have now today the inauguration. So we have, in many ways, the market had a certain character since that Pfizer vaccine came out on November 9th, I believe. It was all about reopening. It was about financial stocks, interest rates going higher, tech stocks, were weak. Energy was the top sector, financials. That was the overall theme. The economy's coming back, and we're going to get stimulus. It's going to be this huge wave of growth. And in many ways, I believe that phase of the market probably ended today. But it's important to actually look at these events, that clearly happen. In many ways, the stimulus is now priced in. Whatever Congress comes out with, don't be surprised, even if they get it through. And I'm not even a judge of politics. I don't know how quickly they will get something done. But at this point, the market has priced in stimulus. So now could very well be a period of time when we see a shift back to the growth stocks. We see a peaking in interest rates. We see a pause in energy stocks. A lot of the stuff that has happened, in energy has priced in a rebound now, and then we're going to go back to the longer term trend. And the longer term trend is energy is that there's too much of it. And the longer term growth trajectory of this market could very well be, what we continue to see. Now, I also want to point out that one of that I just published on TradingView this analysis of the dollar, and from my perspective, in a week we have the Fed. And Jerome Powell is almost certainly going to come out and just basically give a very dovish outlook. There's a good chance they're going to start talking about yield curve controls, driving down the long end of the yield curve. And that's going to be positive for housing. We're starting to see a return to utility stocks, some of these real estate investment trust stocks that benefit from lower interest rates. And then at the same time, earnings for banks, they're already passing. A lot of good news has been priced in. So it's important to just kind of look at what those events are. As a general rule, I always assume the market will price in news before it happens. It's not always true, but for the most part, when something is easy to anticipate, like for example, that the economy is going to get better because of a vaccine, the market's going to price that all in before it even happens. And then when it does happen, the market's going to shrug and move on to the next thing. In my view, the next thing we're looking at now is earnings for big companies. So this shift we saw to smaller companies that no one had really cared about, these weird random small companies like Etsy and these other weird small companies, a lot of this stuff now could very well fade. We wrote about multiple times how there was this shift away from the mega cap stocks toward the smaller companies. It would not surprise me if for the next few weeks that stops working and it's a shift toward the Qs. It goes from and in fact in this finding opportunities in any market, you're going to see here, we have equal weight versus market cap weight. This is extremely important in my opinion. So RSP is basically the equal weighted S&P 500. You're going to see that RSP in the last 21 days is outperforming the SPY. But today it was only up 0.6%, while the SPY was up more than twice that. What does that tell us? That tells us that the big caps are coming back. So when you see the equal weighted indexes, QQEW, for example, outperform, that means that the smaller companies are outperforming the bigger companies. This is within the Qs. In this case, you look at like the Qs and you can see 2.4 for the Qs. The equal weighted NASDAQ was 1.3 up today. And then QQQJ, which is the junior Qs, which are it's the 100 to it's the second 100 biggest, the NASDAQ 100 are the 100 biggest, and the QQQJ are the 101st through 200. The QQQJ has utterly crushed the Qs for months. You can see in the last 21 days, the QQQs are up 4% and the QQQJ is up 7%, but today it flipped. So this tells you right before your eyes, when you start to see these relationships change, it tells you something. And when it coincides with an obvious news event, like inauguration, like a Fed meeting, like earnings, that also tells you something. It makes sense now that people are not going to be messing around with small companies when they can be messing around with your Apples, your Googles, your Netflixes. That's where the attention will return. So hopefully that helps you. I think it's a combination of looking at the numbers, but then also realizing what the news events are. who are the actual publishers of ideas? There it is myself. I publish those articles on TradingView. Okay, so this scan we just did should be finished. So this is going to do the same thing here. Since I made it bigger, it's harder to see, but all right. So here you can see EPS, days still post. This is gonna, it's interesting. This is, gonna have negative numbers because some of these companies did just report. But if we just go down the list and we can see right here, this is going to show us, it's going to estimate for us companies that are coming up. Now, one of the other things I would add that I like to do is I like to look at the, my average options. So here's another thing. Let's add this. Let's go and modify this now. And then let's go to another indicator. Average options volume. We're going to add that. You can add this, right? Let me say trades at least 10,000 contracts a day. All right. It's going to go now. All right, let me just go ahead and look at the next thing on the slide. All right, I just mentioned that. Consider over 10,000 contracts. Another thing is you can look at other things in, what I'm going to actually cancel this because I need to show you this other thing. You can say, I only want to see companies. This is another important thing about Scanner. These indicators I gave you before, like price to book value growth, revenue growth, those are indicators that work in Radar Screen. You can use them in Scanner, but they're going to be slow. There are similar values. They're not exactly the same thing, but they behave similarly if you go up here in these folders, and these are going to be way faster. So you can go into here, things like profitability, you can look at revenue, then you can say revenue growth, percentage change, trailing 12 months. So I say, let's only find these companies that, for example, let's find companies that are reporting earnings soon. That, I'm gonna actually just disable this just because I'm running out of time and I want to show this to you. So find companies that were growing at least 30% in the trailing 12 months. So I'm going to set this greater than 30. So very quickly, a quick thing on Scanner. This is going to show stocks that trade at least 500,000 shares a day, billion market cap. See, I unchecked these, and then revenue greater than 30. Run, boom. This is going to be very fast. And now I'm going to basically be able to scan for companies that have very fast growth. And these are the things that I do a few times a week. I start looking at these companies. A lot of them are really small, but they're not all small. And these are like, I wrote a while back about some of these Chinese companies like GSX. And these are some of the things that I like to kind of look at and start identifying, companies that are growing quickly and stuff. And that is a way to do it. So, I mean, I honestly would say that Scanner and Radar Screen together, they are in some ways confusing because they let you do so much. It's like going into like a cockpit of an airplane that has like 800 gauges, and like at first it is overwhelming, but it really makes sense why you have that much, potential to do stuff. So hopefully I show you just some of the basic things here that can really help you with earnings season. In my opinion, I don't have time to get to this, but one of the things I'm going to just very quickly, let me show you this. In Radar Screen, if we go back to, I'm going to just quickly show you with the Radar Screen here. We can set alerts based on, say we have our companies like, all right, good example, Netflix today, it had a huge move. All right, so we can then highlight this whole thing. With doing this with Radar Screen, it's important to know the interval we're working with. These are set to 5 minutes, so I can change the interval, select all, change my time frame to daily. Okay, now what I want to do is, I'd really like to see, stock like NVIDIA, big rally. I'd really love to see a pullback in NVIDIA to its, something like its 50-day moving average, if that's going to happen, which it probably won't. But here's our NVIDIA chart. I'm sorry, Netflix. Charts coming up. Okay. I'm going to do symbol linking here, symbol linking here. This way, when I click on something in Radar Screen, it will come up over here. All right. So I can now go. I'm going to just erase some of these net change. I don't want to see because that's going to show dollars. All right. I can now add studies. I'm going to add a study for moving average one line. All right. So this is going to probably be the 9-day by default. I go in here, I change it, and then I can say, let's see when it pulls back to 50-day. I then go to alert and I say enable alert and I say alert continuously. Now you can do the same thing if you go to studies, add study, moving average exponential. Okay, so if it pulls back, for example, I like to look sometimes at the 21-day moving, 21-day exponential. You can set an alert, enable alert. Now, if NVIDIA were to pull back to its 21-day exponential moving average, it's going to start lighting up. It's going to start bringing up a yellow dialog box on your screen. We can go to moving average exponential. We can say, for example, set this to 21. See, so say it consolidates here, this moving average runs up, maybe pulls back a little, boom. Maybe you want to be looking for an opportunity like that. It would be crossing that moving average. It actually shows as the alert being triggered because it crossed above it today. But tomorrow when we reload on a company like Netflix, it's just going to be blank. Unless it crashes down to touch it, which it probably won't. But now you're going to see that the alert is set. Another thing is we can say, all right, let's just look for a flat line level. So I like to just go over here. Let's say if it pulls back to 550, if it gets near this high over here. So then we go to, this is very simple. We go to last, we double click on last, we go to inputs, and then we set the input to something like 550. All right, then we set alert, enable alert continuously, boom. You can also set an alert on your percentage change the same way. You can go in here and then you can do an input and then put your number in, set the alert same way. So I wanted to just mention it because some of my best trades come from a stock explodes higher and then I wait. I try to wait for the opportunity to be right. And Radar Screen lets you find those opportunities so many ways. The last word of advice I'll give or suggestion is have one radar screen for stocks that are your alert list and save it, because you don't want to accidentally be like, oh, I'm going to start messing around and then lose your alerts. Use one radar screen just for alerts and then save it. And then, I have what I actually do is I created a job in Windows that goes in using Windows automated tools. It goes and it copies my workspace every 15 minutes and it backs it up in case I ever have a power failure or I crash my computer. It always backs up. I'm always setting alerts and things to find opportunities, and you might want to do something like that. But I would suggest, when you look at Radar Screen, there's a lot of ways you can set alerts. When companies have these earnings reports, like Netflix did today, or other stocks that might gap up, we want to be thinking about, all right, I don't want to try and guess on earnings. I missed that pop, but there's so many times we get those opportunities afterwards. And that's one of the great things that we can then set our alert with Radar Screen, especially with things like a moving average, 21-day exponential, 50-day simple moving average, or something like that. Okay. So these can be programmed after a strong earnings report to find pullbacks. Those are the main things I wanted to cover. I did just want to remind everyone that we do have this blog, Market Insights blog. And we're always posting new things on that. On Fridays during earnings season, we do a recap of all the main earnings of the preceding week. We did this one on banks last week. So a lot of different things, happening in the market right now. And, everything that I come up with is based on ways that I dig into the market trends using the TradeStation platform. Finally, I just want to remind you that all of this information is included in this zip file. We have basically these two PowerPoints that are my December and this webinar included here. This ELD file right here is the all the indicators. This is the previous workspace for my previous webinar, and this is a list of stocks and the ETFs. This will be posted on YouTube in a day or two. I want to thank everyone for being with us. It's always good to talk to you guys, and I'll talk to you again soon. And don't forget to check out Market Insights, and you can also sign up for a newsletter there. Thank you, guys.